Hello all, good morning. So welcome to CMFNL IDT fast track batch. It's okay. So let us discuss the timings of this fast track batch, how it is going to cover, like what chapters we're going to cover in this fast track batch, what books you're going to get when you enroll for fast track batch. It's okay. See, IDT fast track. So 1 second. So students who are attending live, could you confirm whether audio is clear or not? Audio. Is my audio clear? It's okay. So IDT fast track. This fast track applicable for both June 26 exams and even for December 26 exams. It's okay. So we're gonna cover this batch, fast track batch, in 60 hours. It's okay. So 15 days. Every day the timings will be fixed, sir. The same timing, 6:30 to 8 a.m. and again 8:15 to 9:30 a.m. and then 10 to 11:30 a.m. In the first two slots, we'll be continuing with the GST track, whereas in this we'll be going on with the customs track. Customs track. Okay. So from day one onwards, we'll be starting with both GST as well as customs. For the first 3 days only, like all the 3 sessions in first 3 days will be streamed over YouTube. From then, like if you're like live, attending live batch or attending recorded classes, then you can see them in the app. You can see in the app. Okay. So now, let us understand the paper pattern of IDT. Then I'll even say which chapters we're gonna cover in this fast track batch also. See. So question number 1 will be having MCQs. How many MCQs? 15 into 2, it is for 30 marks. 30 marks. Sir, this MCQs related video, okay, so this MCQ coverage, other than this MCQ coverage only, this 15 days. MCQ video, we're going to release it separately, not within this 15 days. Afterwards, again, a separate MCQ video will be made and will be made available to you. MCQs for some 3 to 4 hours, the MCQs video will be recorded. So that will be provided to you. And that's going to cover at least, like let's say out of 15 MCQs, in any worst case, we're going to be covering like 12 MCQs. Okay, that confidence I can give you with the MCQs video I'm going to do. 12 MCQs you're going to do in any case. With the conceptual clarity in the other chapters and all, since you are attending fast track, you can even write 13, 14 also correct in the exam. Okay. Then question number 2. Sir, in GST, in indirect tax paper, we don't have a 14 marks question. Even though it is every question is for 14 marks, in that there will be 2 sub questions. Each question will be asked for 7 marks only. Okay, there is no a big question which is going to be asked for 14 marks. So we have question number 2A and 2B. Question number 2A, it may be asked from supply, e-invoice, or in any extreme case it could be even from e-waybill. From these topics, question number 2A is being asked. Then question number 2B is standardly always about returns. Question number 2, sir, it's going to be a straight theory question. Always as per the trend, if you see, straight theory question. It's not like case study question, not like a problematic question also. It is like a straight theory question. What is like straight theory question? They may ask like, write about schedule 3. Or write about composite supply and mixed supply. Write about e-invoicing, advantages of e-invoicing. So they are like straight points kind of. Even in returns also. What are the components of GSTR1? What are the components of GSTR3B? Okay, what are the features of QRMP scheme? So like that, they're going to ask straight theory questions only. Question number 2. Then, question number 3. Here we have A and again B. Here we'll have chapters like exemptions. From exemptions, they are asking a question. Even in an extreme case, charge point also it may go. Okay, but majorly they're going to cover here exemptions only. 3B is frequently asked from ITC chapter. ITC, input tax credit. Even rule 42, 43, section 18, those part are also important. Section 18 is like reversal of ITC or availment of ITC when shifting from tax paying status to non-tax paying or non-tax paying to tax paying status. So those things will be asked. Okay. Here it's going to be a numerical question only. Numerical kind of question only. They're going to ask question number 3. Question number 2 is like straight theory. Question 3 is like numerical kind of question. Then question number 4. Again, question number 4 also will have 2 sub questions, A, B. Question 4A will be from TDS TCS chapter plus annual return concept. Annual return is nothing but GSTR 9 and reconciliation statement 9C will be there. So regarding those 2 topics, there could be a question here, annual return. Plus there could be even audit related also, audit. Okay, for audit we have 2 sections, section 65 and section 66, like departmental audit and special audit. So they're gonna be covered under question number 4A, TDS TCS, annual return and audit. Okay. Then question number 4B. 4B could be from time of supply mostly from time of supply. Okay. So this could be like TDS TCS, they could ask it like theory also sometimes. They could ask it like a case study kind of question. Time of supply, you know the general questions like, okay, you need to write provision, then analysis, then conclusion. So something like case study kind of question number 4. Then again, question number 5. Again, 5 also has 2 parts, 5A, 5B. Question number 5A is about place of supply. Place of supply, the question is being asked under question number 5A. Question number 5B, it is from value of supply. 5B, it is from value of supply. And then question number 6. We have 2 parts, A and B. Both they are asking from FTP only. FTP. Again, sir, it is going to be straight theory. It's like a numerical kind of question. Then question number 7 as again. Seven A, 7B. 7B, it's like from customs valuation or baggage they are asking. From these two topics they are asking like a question kind of, numerical question kind of. 7B could be any type. They could ask a straight theory question or else like any from rest of the topics of customs. Rest of the topics of customs. And the last one, question number 8. Again, 8 also has 8A, 8B. 8A, it is mostly being asked from the chapter appeals. And 8B, it could be like any chapter, sir, but mostly it is like from value of supply, ITC, supply. That also they're asking like a case law kind of and all, which is going to be little tricky also. So this is the total paper pattern. Okay. Now let me show you the index also. It's okay, sir. So forget about that. It's okay. Index again, it's in a different file. So let me say you what chapters I'm going to cover in the fast track. First chapters are basics. Basics chapter, because first you need to understand the basics terminology, the concept building and all. And one important thing, sir, GST is like built on chapter by chapter. Chapter by chapter the concept will grow. So we cannot directly take a chapter without discussing the basics, and mostly it go in the order only. So we cannot take a random chapter in between and discuss mostly, because the problem is like the GST is like built step by step, and the main problem with GST is like continuity. If you have continuity, the subject is going to be very easy. But the problem is like it's going to have multiple connections. Like in a 6th chapter, you'll have connections with 2nd chapter. Even when you go to 7th chapter, it may have connections with 4th chapter and 5th chapter also. So that one chapter gets connected to another chapter. So even though we discuss like separate chapter kind of, they get linkages and connections with other chapters also. That doesn't happen in income tax, indirect tax. Let's say indirect tax, majority cases, if at least you take certain chapters, the question, or you can learn that particular head without learning the other heads also. Here, if you don't know basics, supply, charge, then you cannot learn any other chapter also, because these are the core basics. Okay, so basics we're gonna discuss here. Supply chapter we're gonna cover. Then charge and composition. Then exemptions we gonna cover. Basic, supply, charge and composition, exemptions. Sir, all these 4 chapters together also may fetch only 2 7 marks questions only you'll get. Maybe under different places, but you'll get here 2 7 marks only. The next slot is like very important slot here. Time of supply, value of supply, place of supply, ITC. These 4 chapters will fetch us 5, sir, not even 4. 5 7 marks questions are gonna get from these 4 chapters. Okay, sometimes maybe instead of here 4, in the above first slot it could be even 3 also. Okay. Then we have returns, TDS TDS and TCS, invoice e-waybill, assessment appeals. So these set again gonna fetch us like 3 into 7 marks. So total, if you see how many questions came, sir, as of now, 10 7 marks questions. Total how many will have? 14 7 marks questions will have, including choice. Here with these chapters we'll cover 10 7 marks. It's okay. So I'm not even assuring you that 10 will come from these chapters only. Yes, there may be a chance of a deviation. So I think in any worst case, 9 questions related content we're gonna cover. Only from this one question may get deferred. Rest 9 questions may be from these topics only. Then we're gonna cover FTP from customs, intro, customs valuation, then customs related baggage, duty drawback. Here from these topics actually the coverage should be 4 into 7 marks. But what I can assure you is like at least we're gonna cover 3 into 7 marks. I mean from these chapters alone, sometimes all the 4 7 marks also may come. But in any worst case also, how many will come? 3 7 marks. So overall, so we're gonna cover here in an extreme case also 9, here 3. So total 12 into 7 out of 14 7 marks questions in fast track. In any extreme case also, we're gonna be covering 12 questions related content we're gonna cover here. And MCQs anyhow we're gonna cover it. It's okay. So IDT paper is a easy paper, sir, scoring paper. These chapters, if you study properly, it's enough. If you are a both group student now, so focus only on these chapters also. Only on these chapters also it's fine. Rest of the chapters, even if you leave also, it's not an issue. It's because these chapters only gonna give us the maximum marks. Sir, are there any other chapters? Yes, there are another 8 to 9 chapters. Okay, in customs itself there are another 2 chapters like warehousing, trade facilitation. 2 chapters are there in customs. Then in GST itself, registration concepts will be there. Invoice also a part of the concepts will be there. Import exports related concept, refunds, then demand and recovery, accounts and audit, penalties, liability to pay taxes, offenses and penalties, transitional provisions. Like this there are some other 8 to 9 chapters will be there. But you look at the past trend, all those chapters together which we are leaving also, maximum 10 marks. Maximum 10 to 12 marks only we gonna get. Okay, 11 to 13, that kind of only, including MCQs and all, we'll get. The chapters we are leaving are for maximum case that 11 to 14 marks. It's okay. So from 128 marks, let us take them as like 15 also. Okay, from 128, if you subtract 15 marks also, still we gonna covering 113 marks in the fast track. So these chapters alone, sir, enough. So don't. And again, I am clearing in the first class itself, sir. Don't think of the chapters we are giving left. I mean, we have been leaving here. From the chapters we are leaving also, yes, I am also saying like one question may come. In an extreme case, 2 7 marks also will come. But that alone is not going to decide your result, because there are other 12 questions which are going to be there from the portions we have covered. Okay, don't try to cover entire syllabus from IDT, sir. It's not possible. Even though you study, you listen now, on the day before exam, you couldn't cover each and every topic. It's okay. So it's always 80-20 rule is there, sir. So like what? Even if you cover 80% of the syllabus effectively, it is enough. Okay, instead of covering the 100% of syllabus averagely, you just focus and put your efforts only on this 80% effectively, it is going to be enough. Okay. And when a student enroll for fast track batch, sir, you'll get 3 set of books. You'll get Pulse, the concept book. You'll get workbook applicator. And you'll get a third book called class notes. So class notes is nothing but the notes we wrote in the regular batch that you will be getting in a printed form also. So these 3 set of books you will get even you enroll for a fast track batch. Okay. And then one more thing, sir. In Pulse, yes, at places there are certain errors, but class notes will not have any of these mistakes or errors because that was the detailed notes which we wrote in the class. So class notes, if any doubts, if any difference is there, stick to what? Class notes. Class notes. Okay. And I even say like both group students now, you can, because all these chapters which I mentioned here in the fast track coverage will be there in the class notes also. All these chapters will cover basic, supply, charge, exemptions in the class notes, time of supply, value of supply, place of supply, ITC, returns, TDSE. These chapters are covered even in the class notes also. Okay, so both group students now mostly link your preparation with class notes. Single group students now, then you could get knowledge over other chapters also. You can refer to Pulse also for other chapters. Okay, and applicator. So coming to the coverage here, in these chapters, concepts wise, we're gonna cover all the concepts from these chapters, concepts wise. Problems, sir, we cannot solve each and every question in the fast track batch. Okay, because in a chapter like time of supply, value of supply, place of supply, ITC, exemptions, there will be 30-40 questions in each and every chapter. So here in fast track, it's not possible to solve each and every question. So I gonna selectively the questions are going to be solved. But I can assure you that, sir, it's like, so usually we'll come up with like some super 50, super 75. Na? Here at least we're going to solve some 150 to 200 questions. Super 150 to 200 questions, which are like important questions in those chapters. Okay. So from a chapter, let's say there are 30 questions. The most important 10 questions we're going to pick, and those 10 questions we're going to solve in that chapter. Okay. So it's not like we're going to solve each and every question, and minute or small questions also we are not going to solve. We're gonna leave them, but all the important questions we're gonna solve them from workbook also. Okay. And then you may have other questions also. Sir, whether these 3 are enough, I need to refer back to scanner or else any other source. Sir, all the past examination questions, model question papers, all these has been included in this set of books also. So this set of books is enough. Okay. And many students will have doubt also. Okay, class notes, when it will be made available? Sir, class notes we're gonna receive tomorrow, I mean on Tuesday. They'll be dispatched from Wednesday. They'll be dispatched from Wednesday. And even if you're a new student, you are enrolling now. If you enroll today, tomorrow your books will get dispatched. Previously, we had stock issues. They went for printing and all, but now all the books are available here. You order today, immediate next day, you'll get the dispatch and tracking details. So starting with the first chapter, sir, Introduction to GST, or called as Basics. So introduction to GST, sir. Sir, and again, so I have shared the PDFs in the fast track group also. So whoever for the initial 4 or 5 chapters which we're going to discuss. I already shared the PDFs. So use them until you get the hard copy of class notes. So indirect tax mechanism, sir. Let us see how indirect tax mechanism will work. There is a supplier. There's a supplier. He supplies goods and services to a recipient. Normally, he sold goods and services to a recipient buyer. Then recipient has to pay what? For that good, let's say the good value is 10,000. He has to pay 10,000 and even the tax applicable on it also. Tax na indirect tax applicable on it also. Let's say indirect tax at 1800, total how much? 11,800. So this recipient or buyer has to pay how much? 11,800 as to the seller. Now seller, can he take the total 11,800? No. 10,000 is only for his goods. The other 1,800 has to pay to the government. So seller will collect the tax money also from the buyer and he will be paying the tax money to the government. Okay. So with this what we are understanding? Ultimately the tax money is going from whose pocket? Recipient or buyer pocket only the money is going out. But does buyer is responsibility to pay tax to the government? So let's say sir on this transaction no tax is paid. Government will come and ask whom? Seller or buyer? Seller only they will ask. Okay, so it's the obligation, liability, responsibility of whom? Supplier to pay the taxes. Whereas supplier is responsible. Will supplier will pay from his pocket? Supplier is not paying from his pocket. What he is doing? He is collecting from the buyer even the tax money also and paying. So the burden ultimately, the tax is on whom? Recipient only. But the liability, responsibility to pay tax is on supplier. Obligation or liability is on supplier, but the burden is on recipient. Okay. So look at the entry, sir, for this. Okay, sir, this entry very important, sir. At many places, if you know entries, then at many places, your confusion will get avoided easily. Okay, basic entry points only, basic accounting points. Sir, what is the usual sale entry? Normal sale entry. Cash account debit to sales. Or else like credit sales, the particular debtor account debit to sales. Okay. Now, that sales even includes GST. Then what? Sir, GST amount we cannot add to sales. Why? Sales that your money. That money is belonging to that person. Whereas GST amount collected he cannot take. Even though he received, he again has to pay to whom? Government. So cash account, how much he received here? 11,800 received. But he has to recognize as sales how much? 10,000 only. Other 1,800 he has to pay to the government. That's why written as tax payable to indirect tax payable. Cash bank account debit to sales and to indirect tax payable. So nothing but here what we could observe, GST element we are not adding into the sales. Later we'll discuss a definition called turnover, aggregate turnover. When you are not even including the GST amount in sale value, why we will include in turnover? What is called turnover? Turnover means nothing but what? Total of sales. So in sales are you including the GST element? No. So then even in turnover also GST element will not be included. Understand, sir? So simple entry, sir. Cash bank account debit to sales, but GST element you are showing separately. Why? Because GST has to be paid to the government. It's a liability. That's why you are crediting. Sale is an income. That's why you are crediting. Whereas cash bank is an asset. You are receiving asset or asset is increasing. So you'll be what? Debiting. Now, federal structure. India has a federal structure. What is called federal structure, sir? Federal structure means here we'll have states and a central government also, state government also, and we have local authorities also. All these not controlled by central. Yes, there is a central power, central government, states as state governments, local authorities also there. But all these three are independent. See, otherwise why we should have state elections? Let's say in Telangana example if you take. If central and state doesn't have separate powers, what's the point of Telangana people electing Congress government there? So when central is NDA government, in Telangana and in Karnataka, if Congress government is there also, there is of no use, right? If at all The central hierarchy only has to be followed. So that's why India doesn't have such thing. We have independence. Okay, central states are independent. They can independently take decisions. Independently, they can even generate their revenues. So remember, independent. If you want to be independent, two things are needed. One is like what? Your own income. So you all are dependent or independent as of now? Dependent only. Why? Because you are not at all having your own source of income. So first one, you having your own income. Second thing, what? Even though you have, let's say sir, a second class kid, okay, his grandfather kept on his name, the second class kid name, a property. On that property, every month, there may be 2 lakhs or 3 lakhs rental income will be there. Okay, so now this kid is having his own source of income. But is he called as independent? Why? What is missing here? He should be competent of taking the decisions on his own. Okay, the decision making capacity should be there. Okay, that means like at least the age should come to take a decision on his own. So you have the age to take your decision on your own. But what is missing? Earning the income independently or on your own is missing. When these two are there, then you'll become independent, right? Same here also, central and state are independent. That means what? They have their own source of revenues and they have their own decision making capabilities. That's why they are called as what? Independent. So central, state, local authorities, all these three are independent. They are not dependent on each other. There is no hierarchy also, central top, state afterwards, local authorities beneath it. There is no such kind of hierarchy actually. Local authorities also can generate their own revenues. What revenues local authorities can generate, sir? Property taxes, sewage taxes, okay? So through that they will be earning the revenue. And they will have a body again. For local authorities also, village panchayats, municipal corporations, they also has elected bodies. So those people will take decisions on their own. So that's why local authorities, state government also. State government can generate their own revenues. Okay? And state government also has a legislative council, like assembly and all is there. So where they'll pass their bills and take a decision there. Central government, anyhow, we know what, there is a parliament where a bill will be passed, a decision will be taken on their own. And then they can generate their own source of revenues. So federal structure means, the essence of federal structure is nothing but maintaining these three differently. One particular government not taking over the powers of other government is only called as what? Federal structure. Okay? So we have separate powers for central, separate powers for state. Okay? So it is similar to that of Canada, US also, same things. They are also federal structures only, federal governments also, because they are also, states will be there, central will be there. States will have different ministers and central also will have. But even though central overall they look after, but they cannot exercise the powers of a state chief minister and all. Then, taxes that were there prior to GST. Okay, sir, GST is a recent law. It came into force only on 1st July 2017. Before that, there is no indirect tax. No, sir. Indirect tax is one of the ancient taxes. Like it's there from ages. Okay. One of the first of indirect taxes is like customs. Okay. The word customs itself came like what? Custom means in general sense what is called custom? Customs and traditions. Customs and traditions means what, sir? It's a practice. It's been happening from so many years. That's why the name itself is given as what? Customs. Okay, it's a practice. What used to happen, sir, in India? Like the Arab traders. It's okay, sir, you know this like what? Vasco da Gama is the one who discovered India. Okay, it doesn't mean before Vasco da Gama invented a sea route to India that nobody or no foreign traders came to India. Only the Europeans came to India. From Europe to India, that route has been discovered by Vasco da Gama. Previously, what we used to have like Pakistan, Afghanistan, like all these Asia, all these Arab countries, we have land routes only. So from there, the traders used to come here. It's okay, India used to be a fertile land, sir. It's not now. From hundreds of years, India used to be a rich country because of their fertile lands. They used to have so much of money, wealthy people used to be there. So now what? Those Arab traders used to come to India. They'll sell their cosmetics. like leather bags. So those kind of products they used to bring here. First they'll go to the king, because India is ruled by different kings. Okay, so they'll go to a king, and there first they'll offer to the king and queen certain products which they brought. So okay, let's say they handbags kind of, these things they brought. First they'll offer them to the king. Let's say they brought some 100 items. First they'll offer some 4 or 5 to king. Okay, then if king likes them, now what he'll say? It's okay, he'll simply say them to, or he'll permit them to sell to the other wealthy people in the particular kingdom. So then the Arabs used to sell to those people and they used to get the money. And again they'll go back to their place. Again, will bring with different products and all. So like that. So from the goods they brought, a certain part they are giving it to the king. Okay, out of 100 items, 5 items they are giving, 10 items they are giving. Okay, but now post-independence, or when the Britishers came, that time there is no king's rule. Government was introduced. So government cannot take, let's say out of 100 items, government cannot take 10 goods and keep with them. King na he can use for his personal purpose. Now government na there are no kings. People are the king. So that's why they cannot use. That's why they started using what? Okay, we'll find out the value of those goods. Out of those value, a percentage you have to pay to the government as money. Okay, and that money will be used by the government for all the public purposes. Like that, customs is the ancient law which was started. Okay, later on, all these taxes used to be evolved and came, sir. So there are so many taxes even prior to GST also. So first one we are discussing is like central sales tax. So understand, previously, before GST, the revenue from sale of goods, the tax revenue from sale of goods is exclusively to state government. Understand? Before GST, sir, for central government, income tax is there, revenue source. For state government, there is no income tax now. And for central government, there used to be service tax. On services, they only used to levy tax, and the total revenue used to go to central only. But states doesn't have such incomes. So now what is the other source of income for states? That's why they said in the constitution itself what? On sale of goods, the entire tax revenue will go to whom? State governments only prior to GST. Okay, remember this one, sir. On sale of goods, entire revenue goes to whom? State governments only prior to introduction of GST. Okay, now first one, sir, central sales tax. Central sales tax. Sir, I said like sales tax revenue will go to states, but here the name is what? Central sales tax. Sir, understand, it is an interstate sale. Interstate sale. What is called interstate? When two different states involve. Okay, so let us not go much technical also. Simply seller in one state, buyer in another state, then we call it as what? Interstate. In interstate, sir, there is a problem. Let's say Tamil Nadu selling goods to Karnataka. Now, Tamil Nadu government will come and say like what? Tamil Nadu only should get the tax revenue because the origin of the goods, the seller is in Tamil Nadu. Karnataka will come and say like what? No, the tax revenue has to come to Karnataka because the buyer is in Karnataka. So, okay, now there is a fight now. Who is great? Seller important or buyer important? If seller is important, then the revenue has to go to Tamil Nadu state. Buyer important, then it has to go to Karnataka. But can we decide seller important or buyer important? Faculty important or students important? Both are important. If no students now, to whom faculty will teach? If no faculty now, from whom students will get the knowledge? So both are important. So in any case, seller also important, buyer also important. There may be situations. At a particular point of time, maybe buyer is only important because of the demand and supply. But again, in a cycle, at some point of time, again, supplier will only be important. So we cannot decide that. So, okay, so these two states are fighting now. So, okay, Tamil Nadu saying like revenue has to come to us only. Karnataka saying like revenue has to come us only. So, in between states, there are unnecessary fights. That's why Central came and said like, you don't fight, I will only collect the taxes. So they started levying called what? Central sales tax. Okay, but they cannot take away the revenue. They cannot take away because Constitution does not allow for the flexibility or to make or to avoid dispute between the states. Central involved and started levying a tax called what? Central sales tax on interstate sale. But the revenue has to be again given to the state government only. So which state? central will give the revenue, tax revenue to the origin state. Origin means what? Where the supplier is located, that is called as origin state. Okay, for the sake of convenience, central will collect, but given it to whom? Origin state only. So central sales tax levied by central government, reason interstate sale, CST collected will be transferred by central government to selling state. Then countervailing duty. Okay, you may not understand much, sir. Countervailing duty is something you will get it in customs. Okay, levied by central government only on imports. I am not discussing much about this point, sir. Once we go into the customs, in today or tomorrow's class, you will understand this point also. So I don't want to spend much time on this here. Advertisement tax. When any advertisements are being made, hoardings are kept, then state government used to levy advertisement tax. First one is what, sir? Central sales tax, levied by whom? Central government, but ultimately given to state governments only. On what it is levied? Interstate sale. Then advertisement tax, levied on advertisements by whom? State government. Then lottery tax. Lottery tax also levied by whom? State government on sale of lottery tickets. Sir, sale of lottery tickets, if you are not from Kerala, na, you think like for lottery tickets also is there a need of separate tax? Because let's say examples of AP, Telangana, if you see also, or any northern states if you go also, we don't see frequently this lottery ticket journal. Okay, we'll see very rarely about this lottery and all. But in Kerala, it's like a normal thing only, selling lottery and all. You will find so many shops where they are selling lottery tickets. Okay, that's why in certain states where lottery is dominant or lottery is a major thing, there is lottery tax which is levied by state government on sale of lottery tickets. Then luxury tax. Okay, on luxury goods like high-end model cars, cosmetics and all, there used to be a luxury tax also which is levied by state government. Does not include local authorities. State government is separate, local authorities are separate. Okay, then luxury tax. On luxury goods, what will be levied? Luxury tax will be levied. Now, octroi tax. Octroi tax is nothing but entry tax. What is the purpose of entry tax? Sir, let's say Bharadwaj started a restaurant in in their locality. Bharadwaj started a restaurant and it's making decent profits. Then looking at him, since the people think like he is earning more, from a neighbor place, another person came and he also started a restaurant there. Now Bharadwaj will allow him to do business? No. He started what? You are from some other village, why you came and started here? So he'll take some fight with him and he'll try to remove his place. Why? What's the problem? When there is only one restaurant, he'll have more demand. When there are two restaurants, obviously his customers will divide, his demand will come down. That's why he is not ready or accepting the another person also start doing the business. Now look at from a state perspective. Okay, this is something which is more, first introduced in Maharashtra. What happened in Maharashtra? Sir, Maharashtra, Mumbai, we know, the business capital of India. Lot of business, commercial transactions will happen in Maharashtra. So why it happened? Sir, from long back, the neighboring states to Maharashtra also will bring their products into Maharashtra and they're going to sell there. So now native Maharashtrians felt like so much of competition from the neighboring states also. Because only if they sell within their state, they'll have more demand. They can get more price. But when the Karnataka people coming and selling there, when the other neighboring states people coming and selling there, they are having more supplies. So obviously less the demand is being created. Now they have started pressuring on state governments that priority has to be there at least to the native Maharashtrians. Okay, so that's why what they introduce, entry tax. Entry tax means you are coming from other state, you pay little extra tax. Then what happens? Local people will not have that extra tax, but when you are coming from other state, you'll have some extra tax. So, okay, so since you were paying an extra tax, 2%, 3%, your goods are little costlier than compared to the local people. So through that, locals are getting a little advantage over compared to the non-other states people. That's why they introduce what? Octroi tax or entry tax. Okay, for allowing to sell goods from other states. Then value added tax. Value added tax is nothing but the other name is sales tax levied by state government on intra-state sales. Sir, if you see here, octroi tax is also on sale of goods only. But from where? From other state they are coming and selling. Value added tax, it is also what? Sales tax only. On goods sale only it is levying, but on intra-state. Luxury tax is also what? Sale of goods only. Lottery tax, lottery ticket is also treated as good only. That's why lottery ticket is also on sale of good. Okay, advertisement tax, this is also for sale of good only they are advertising. And central sales tax is for interstate sale of, again what? Goods only. So that's why all these taxes are levied or received by state government only on what? Sale of goods mostly. Then entertainment tax. Sir, entertainment tax, in some places it is levied by state government, whereas in some states it is levied by local authorities. Okay, example, if you go to Chennai, in Chennai there is entertainment tax which is levied by Chennai Municipal Corporation. A Greater Chennai Municipal Corporation used to levy what? Will be levying entertainment tax on what? This movie tickets, entertainment activities. Okay, any concerts, shows are organizing, on those entry tickets, there will be what? Entry tickets, which is levied by local authorities. In some states it is levied by state governments. Then excise duty. Excise duty, sir, I hope you know what is called excise duty, or at least it's not exercise, sir. Inter-level na, so many times students will write, it's not as exercise, they'll write it as exercise, so it's not exercise, sir, it is excise duty. Excise. Sir, there are two excise duties, central excise duty, state excise duty. Here we are referring to central excise duty. Central excise duty is levied on manufacture of all the goods except alcohol. Then on alcohol, no tax. No. On alcohol manufacturing, state government will levy tax. Okay. On alcohol, the exclusive right to collect revenue is with state government. On alcohol, whatever the tax revenue comes, that should go to whom? State government only. That's why except alcohol, on all the others, the excise duty will be levied by whom? Central government. The last one, service tax. Service tax is levied by whom? Central government for providing services. So what are the taxes that were there, sir, prior to GST? Central sales tax, okay, countervailing duty, advertisement tax, lottery tax, luxury tax, octroi tax, VAT, excise duty, entertainment tax, service tax. Okay, for this only we have a code. C for central sales tax and countervailing duty, A for advertisement tax, L for luxury tax, lottery tax, O for octroi tax, V for VAT, E for excise duty and entertainment tax, and S for service tax. So now all these taxes are what? Subsumed, merged into GST. But remember a few things, sir. You all know already, petrol is under GST or not under GST? Petrol currently not under the purview of GST. Alcohol, not under GST. Then on petrol and alcohol, no taxes at all. Petrol and alcohol, there are taxes, but not GST. Then what are the other taxes? So now we said like excise duty is subsumed into GST. Merged into GST. No more excise duty. But on alcohol, on petroleum products, excise duty is there. On manufacturing of alcohol, state excise duty. Okay. On manufacturing of petrol products, central excise duty. On sale of petroleum products, state VAT is also there. Or even interstate na CST, central sales tax, is also there. Okay. Now see, sir, central excise duty. Central excise duty actually what? Subsumed into GST. But I already said what? Excise duty on petroleum products is still there. Why? Because on them GST not yet introduced. And one more thing, sir, central excise duty on tobacco and on tobacco products, both excise duty and GST is there. So even after introduction of GST also, central government has retained the power to levy excise duty on tobacco and tobacco products. So if on tobacco and tobacco product sales, there will be GST as well as Excise duty. Sir, so much tax will be there. Na? Okay, but what's the problem to you? Will all these, okay, smokers will come and do dharnas and in the road, like cigarette rates has to be reduced, tobacco prices has to come down. If onion price increase, na, people will come on to roads. Petrol prices increase, na, at least people will come on to roads. Okay, but tobacco prices increased, alcohol prices increased, nobody will come and start doing these band rallies and all, not available, because they are, as per the society norms, those are not moral, okay, or else not encourageable things. That's why what, on tobacco products, even government revenue levies so much of taxes also, nobody will question. That's why on tobacco, and even government will defend also. In what way? By levying more taxes on them, their prices are increasing. When prices are increasing, demand will come down, which is better only now. Okay, that's what government will defend with this point. So that's why on tobacco products, even after introduction of GST also, there is still excise duty continuing. Then state excise duty. What? Even after introduction of GST also, state excise duty is continuing on alcohol. No doubt about it. Even on certain Indian hemp, opium, Indian hemp, narcotic drugs. These are under the GST. Sir, opium, hemp, narcotic drugs, these are even used for medical purposes also. Not like as like in movies, drugs, not only that category, even for medical purposes also these drugs will be used. But on these drugs what? There is both excise duty, state excise duty, and even GST also. So even after introduction of GST also, on these products, both the taxes are continuing. Then opium, Indian hemp, narcotic drugs. Here on tobacco, both excise duty and GST. Then entertainment tax. Entertainment tax is levied by whom, sir? State government, subsumed into GST. But here if you remember, sir, entertainment tax, in some places it is levied by state government, some places levied by local authority. So entertainment tax, which is levied by state governments only, subsumed. If at any place it is levied by local authorities, it is still continuing. Sir, able to understand? Entertainment tax levied by state government, subsumed into GST. Levied by local authorities, it is there as it is. So that's why in Chennai, still there is entertainment tax. Because in Chennai, entertainment tax is not levied by Tamil Nadu government. It's levied by Chennai Municipal Corporation. So it is levied by local authorities, still continuing. Okay? So simple thing, sir. What are the taxes that are subsumed into GST? Central sales tax, countervailing duty, advertisement tax, luxury tax, lottery tax, octroi tax, VAT, excise duty, entertainment tax, service tax. Now we are into the concept of ITC. ITC means what, sir? Input tax credit. Okay, first just one line you remember of ITC, and then we'll discuss even the significance of ITC. ITC is something you get as a credit or you get as a cash back when you made a purchase, when you have an inward supply. On the inward supply, whatever is the tax element, that tax element you can avail as what? ITC. Let's say you paid 1200. 1000 rupees is the good value, 200 rupees is the tax. Total how much you paid? Bharadwaj? 1200 has been paid. That 200 rupees again you will get back as cash back. Get back as what? Cash back. Okay. So 1200 you paid, but you are getting back how much? 200. Sir, can you use this 200 for any purpose? No. This 200 which you got as credit can be used only to discharge the tax payable. See here. Supplier supplied goods worth 1000, tax 180, total how much he paid? 1180. Now recipient is paying how much? 1180. So in this total transaction, what is the tax element? 180. That tax element can be taken as what? Input tax credit, ITC. Simple like cashback. You'll get that as cashback. You'll pay 1180, you'll get back 180. But this 180 cannot be used for any purpose. Only for what? Payment of tax. Then understanding double taxation and cascading. Understanding double taxation and cascading. So only when we understand double taxation and cascading, then we'll understand the importance of ITC. Okay, ITC is introduced only to eliminate double taxation and cascading. Okay, look at this example, sir, clearly. Manufacturer cost is 900 rupees. His margin is 100. Selling price 1000. His selling price is how much, sir? 1000. Cost 900, margin 100, selling price 1000. On this, excise duty is levied at a rate of 10%. Sir, pre-GST. Pre-GST they are levying what? Excise duty, because the good has been manufactured. So it levied how much? Focus on the disturb chestundamma bhavya. So she's like అదే ఇటు వచ్చింది మళ్ళీ పెంచుకుంటావమ్మా దాన్ని. Hello all students over live. Good morning. Are you able to follow or sleep? ఏం కాదులేమ్మా. అదేం చంపేయలేదు కదా. బల్లిగారు చచ్చిపోయిన వాళ్ళు ఎవరు లేరు. అసలు మనం డిస్టర్బ్ కూడా చేయవాడు, కానీ ఏదో అవి చేసుకుంటే వెళ్ళిపోతాం అంటే చాలా సాఫ్ట్. మరి అంతే కదా, ఇప్పుడు కుక్కలన్నా వచ్చి మనల్ని కనీసం డిస్టర్బ్ అనేది చేస్తాయి. వేసి ఎప్పుడైనా డిస్టర్బ్ చేస్తే సైలెంట్గా ఆడి పైన మనం తిరగని ప్లేస్లో తిరుగుతాయి. అసలు మనకి ఏ డిస్టర్బెన్స్ ఉంది వాడి వల్ల? అన్నెసరీగా వాడిని చూసి డిస్టర్బెన్స్ ఫీల్ అవుతున్నారు. కానీ hello all, it's okay. See, understanding double taxation and cascading. To manufacturer, the cost of manufacturing the good is how much? 900. Margin is 100. So total you can sell at what? 1000 rupees. On this, excise duty levied 100. So okay, sir, why excise duty? This example we are discussing before GST. Even in GST also, this example with GST figures also it can be did. Excise duty at a rate of 100. So total how much, sir? 1100. On this, VAT at a rate of 10%. Okay, sir, understand, previously VAT is not levied on this selling price 1000. VAT is levied on what? 1100, which is the total of sale value plus excise duty. So okay, so on excise duty 1100 VAT is levied. How much? 110. Sir, simple point. If you it's okay. It's okay. There is a targeted lizard attack on girls now. అది ఎట్లా వచ్చిందమ్మా మీ బ్యాగ్లోనే వచ్చి ఉంటుంది ఇక్కడికి ఉండేవి ఇక్కడ మరి ఇవ్వాలంటే అది అగ్రెసివ్గా ఉంది See, cost 900, margin 100, selling price 1000. Excise duty is what? 100. So total 1100. Now VAT 10% is not levied on selling price 1000. It's levied on what? 1100. By levying on 1100, sir, 1100 is what? 1000 excise duty plus 1000 selling price plus 100 excise duty. Now when you are levying VAT, you are not only levying on the goods value, you are even levying on what? Excise duty also. So the tax amount also again getting taxed. So tax on tax is nothing but what? Cascading. Okay, that is already there. Now VAT 110. So total invoice price is how much, sir? 1210. Sir, in this example, we are assuming as if there is no ITC. Why like that means? If there is ITC, then double taxation and cascading will be eliminated. So first we'll understand without ITC. Then you'll understand the significance of double taxation and cascading. GST entademo. Hi. నేను వేడి పంపించాను భయమా నీకు ఇక్కడ పోయింది నావి వస్తాను ఎట్లా అట్లా వెళ్ళిపోతుంది ఓకే మీరే దాన్ని ఏదో చేస్తారు డిప్రెషన్లోకి వెళ్ళిందాడు వీళ్ళు వెళ్ళిపోయారనేమో వీళ్ళందరూ రాలేదనేమో అక్కడ నుంచి వ్యూ బాగా అనిపించేది వాళ్ళు ఎవరు లేరని చెప్పి బాధపడతారు మన సైడ్లో చేస్తున్నావా ఇంకోటి తీసుకొచ్చి పెడతా తగ్గిపోయిందేమో Understanding double taxation, sir. Okay, see what happened. Manufacturers sold the goods for how much? 1210. When it is sold for 1210, sorry, here understand this example is without ITC. Without ITC, cost 900, margin 100. So selling price is how much? 1000. Excise duty is how much? 100. So total 1100. On 1100. You levy VAT 110. Total selling price how much? 1210. Manufacturer sells for 1210. Then the cost to wholesaler is how much? 1210. And again he added his margin 100. Total 1310. So here no excise duty. Why? Excise duty is levied only at manufacturing stage. So for wholesaler no excise duty. But on 1310 VAT will be levied. Again 131. See here. How this 1310 came, sir? 1100 is from previous stage. Here. 110 is from what? The VAT. And another 100 is the value addition made here. Okay. If you levy tax on 1310, the previously taxed amount also again getting taxed. Okay. This 1100 already taxed in the previous stage. This 110 is nothing but the tax in previous stage. That tax also again getting taxed. Okay, sir, the amount which is taxed also getting taxed, and even the tax amount also again getting taxed. Okay, so value addition. For us, what is the problem? This 1100 is included in this 1310 also. Okay, it was included in 1210. 1210 included here. So this 1100 in wholesaler stage, again it is getting taxed. The same amount, if it is getting taxed at multiple times, it is called as what? Double taxation. This tax amount also being included in this 1310, and this 110 also again getting taxed. So there is tax on tax. Tax on tax is nothing but what? Cascading. So there is double taxation, the same amount getting taxed more than once. The tax amount is again getting taxed, is called as what? Cascading. Okay. So it's not only in this stage, even in retailer stage also. If you see 1551 here, out of this 1551, 1310 came from here, which is already taxed and again getting taxed. This 131 is nothing but tax amount again getting taxed. This value addition alone, no problem, because that's the new thing added, that if it is taxed also, no problem. But this 1100 being taxed, 110 being taxed is what? The amount which is already taxed again getting taxed, and even the tax amount also again getting taxed. So there is double taxation and cascading. Okay. So ultimately, retailer is selling to customer at what value here? 1706. A cost 900 good. By the time it reaches the customer, it is becoming how much? 1706. See how much the government is getting total revenue. 110, 131 plus 155. Total how much, sir? 110, 131 plus 155. 390. So the total government revenue is how much? 396. Okay, now we'll see elimination of double taxation and cascading with ITC. Same example. Now we'll take what? ITC also. Cost 900, margin 100, total selling price 1000. On that excise duty 100, subtotal 1100. On that VAT 10% 110. Total invoice price is how much? 1210. In this, sir, forget about excise duty. Okay, only we are focusing on what? VAT element. See, out of total 1210, what is the VAT element? 110. That 110 you will get as cashback or credit. Okay, sir, you paid 1210, but you are getting back how much? 110. So that means your effective cost is only 1100. Even though you paid 1210, you are getting back how much? 110. Na? So your effective cost is only 1100. On that again margin 100. 1200 is the amount. Okay. But now on 1200, if you levy tax 120. Sir, you may say like, sir, previously here 1310 taxed. Now 1200 is taxed. What is the difference? 110 lonina. Sir, understand what happens means, you will not pay this total 120 in cash. What you will do, to this 120, you will adjust your ITC 110. Effectively, you are paying cash how much? 10 rupees only you are paying. So in this stage, government will get extra how much? 10 rupees only. It will not get 120 again, because the ITC you gonna adjust. Only in nothing but why value added tax? At every stage, the value added alone will get taxed. Here, out of 1200 selling price, 1100 came from what stage? Previous stage only. 100 is the only value addition made. If you tax only value addition, 100 into 10%, how much? 10 rupees. Here also you are paying tax effectively how much? You have to pay 120, but you already had ITC of how much? 110. If you adjust that, effectively you are paying how much? 10 rupees only as tax. So, okay. So because of ITC, instead of taxing the cumulative amount, you are only taxing the value addition made at each stage. Value addition made at each stage. In simple, the taxes paid in prior stages. Okay, you are at wholesaler stage. The tax paid at prior stage, how much? 110 is allowed to set off with the tax payable in current stage. The tax paid in prior stage is allowed to set off with the tax payable in current stage. How much is the tax payable in current stage? 120. The tax payable in prior stage is how much? 110. That is allowed to set off. If you set off, how much you are paying? 10. Okay. To make the set off possible, that 110 which we are setting off is called as ITC. Okay. The concept is simple. At every stage, taxes paid in prior stage are allowed as set off. Effectively, then what happens? Only on the extra value addition made only you are paying taxes. Okay. So with ITC, see, ultimately the customer is getting at what price? 1430 only. But in the previous same, see, manufacturer has same 100 rupees profit, wholesaler also has 100 rupees, retailer also has 100. In the previous example also 100, 100, 100. So these business people margins didn't disturb. Their cost 900, here also first cost 900 only. But with ITC, ultimately the customer is getting at what price? 1430. But without ITC, how much? 1706 has to pay. So with ITC better, without ITC better? With ITC, we'll get the products at much more cheaper price. Why? Because double taxation eliminated, cascading also has been eliminated. Sir, then who is losing this money? Government. Sir, previous case, government got how much total? 396. Now government will get 110, 10, 10. Total 130 rupees only government getting, whereas previously without ITC government used to get 396. Sir, then for government it's a loss now. Sir, understand, if government will not come to this stage now, what happens? The prices of the goods will be more. Inflation will come. When there is inflation now, people can't even afford to buy. When they can't even afford to buy, then government will not even get that revenue also. So, okay, so first the goods should be made accessible. So, okay, when they are accessible within the range of their spending capacity, then they'll buy more. When they buy more, obviously government tax revenue will increase. Okay. So now with ITC, what is the entry? Sir, understand, wholesaler has to pay how much? 1210 paid. Cash went outside how much? 1210. So cash account credit to cash. How much? 1210. He got purchased to an extent of 1100. To purchases, purchases account debit 1100. Cash account credit 1210. Then the balance 110 will recognize as what? ITC. ITC is an asset. Why it is an asset? Because that balance you can adjust with the tax liability. It can set off with the tax liability. It reduces your tax liability. So ITC is what? It's an asset. So expense, purchase, a goods account debit 1100, VAT credit. Pre-GST na VAT. Now GST na GST credit. CGST credit, SGST credit, IGST credit, account debit 110 to cash account 1210. Okay. So this is the entry with what? ITC. Understand, sir? So elimination of double taxation and cascading. Sir, how ITC works? At every, okay, when you are a recipient, on your inwards, whatever is the tax element that you're going to get as ITC. Now a common question. Day to day, you will buy so many things. You will buy chocolates, you will buy biscuits, you will buy books, you will buy calculators, all these things, right? On all those, are you getting ITC? Why you are not getting ITC? Only if you are a registered person, then you will get ITC. That also when you purchase from a registered person and you are a registered person, then only you will get ITC. Okay, don't think like, sir, we also buying, why we are not getting ITC? Cheating is happening. No, no cheating. If you are a registered person, okay, then you will get ITC. Understand? So ITC is nothing but what? The tax paid in the prior stages is given as ITC credit, which you can set off with the tax liability on outwards. On your outwards, on inwards. In the prior stage, what is the tax paid that you take as credit? And on your outwards, whatever is the tax payable, with that ITC can be adjusted. Okay, na? So with why ITC has been introduced na? To eliminate double taxation and cascading. So ITC is a backbone of the indirect taxes. Without ITC, we have to pay so much of taxes, which is not good for the economy. That's why they introduced a concept called ITC. And this entry also important, sir. Practical entry. So, okay, when you purchase goods, what is the normal entry? Purchase account debit to cash. But here, on purchase, you will get credit also, input tax credit also. That's why you paid total 1210. but 1100 is only purchase value. Other 110 you can avail as ITC. So purchase account debit, ITC account debit 110, and to the cash account 1210. Okay, na sir? So can take break now. So post break we'll continue with the balance in the first chapter. So okay, so there's a 15 minutes break, sir. We'll again resume at 8:15. The same live will be continuing. The same live will be continuing, sir. 8:15. So to continue with our discussion, so the next topic is like need for GST. So why GST has to be introduced? What is the need for GST? First one, sir. See, if you remember the taxes that were there prior to GST, one among them is CST, Central Sales Tax. CST is paid on what? Interstate sale. Such CST paid on interstate sale is not given as ITC. CST paid on interstate sale is not available as ITC. So, okay, previously there is no input tax rate concept with respect to CST. What happens, sir, if it is not given as ITC? Sir, if it is not given as ITC, it will be included in the cost element. Then to that extent, there will be double taxation, cascading, price will increase. Okay, that is one reason. Second one, excise duty. Excise duty paid previously, excise duty when it comes, sir, manufacture. But that excise duty is also given as credit only in case of manufacturer. If you are a wholesaler, retailer, trader, you will not get any excise duty credit also. That is the problem. Interstate sale, CST paid, not allowed as credit. Excise duty paid also not allowed as credit or input tax rate to wholesalers and retailers. Then non-integration of VAT and service tax. What does it mean? Let's say, sir, a building is being constructed. Okay. Now, for this building construction, I gave a contract to construct this building. He only has to provide cement, iron, everything. He only has to provide service. Now he is not only selling me cement, iron and all, he is even providing service. So these are usually called as works contract, which involves both good element as well as service element. Now, I mean, pre-GST, what happens now? In this works contract, goods involved, right? That's why considering it as good, VAT will be levied. Service also involved, right? Considering it as service, even service tax also will be levied. So on a single contract or on a same contract, two taxes are being levied. Both VAT levied, service tax also levied. So, okay, why? Because there is no coordination or integration between VAT and service tax. Why? Service tax is levied by central government, VAT is levied by state government. Both has two different revenue sources, I mean, two different governments. No? That's why they used to levy VAT, service tax, both on a single transaction. Okay, that is the problem. So, what are the need? Need nothing but issues in pre-GST era which has lead to GST. First one is what? The tax levied on interstate, CST, is not given as ITC. Excise duty is also not given as credit to wholesalers and retailers. Third one, non-integration of VAT and service tax. Since VAT and service tax are not integrated on a single contract, sometimes both VAT will be levied and even service tax also levied. Fourth one, non-inclusion of several state levies into VAT. Sir, advertisement tax levied by state government, luxury tax, entry tax, sales tax, state government. So why, if all these taxes are related to sale of goods only, all these are levied by state government only, why this many multiple taxes has to be levied? They can merge all those into a single tax. Na? So non-inclusion of several state levies into VAT. Levying different state levies is also a problem. So let's say, sir, a high-end model car is sold. High-end model car, nothing but luxury car is being sold. Okay, let's say it is selling from Bangalore to Maharashtra. Okay, in Maharashtra they are selling. So now on this, there may be CST, Central Sales Tax. Since it is a luxury good, there will be luxury tax and entry tax also might be levied. Okay, or else let's say within the state only they are selling. Within Maharashtra only they are selling a luxury car. Same car, there are two taxes. Sales tax is there and even sales tax is there and even what is there? Luxury tax is also there. Both are levied by whom? State government only. Then why two taxes? They can merge them into one single tax. Na? So that is the problem in the pre-GST era. Non-inclusion of several state levies into one tax. Okay. Sir, problem is compliance wise also problem only. For luxury tax related, you have to file a separate return. For VAT related, again you need to file a separate return. This has to be paid separately, that has to be paid separately. So that is the problem. And the last one, to bring uniformity among tax procedures and collections. Sir, across the country, there is no uniformity at all in indirect taxes. The VAT law followed in Tamil Nadu and the VAT law followed in Maharashtra may not be same because they are framed by state governments themselves. So the VAT in AP is different from VAT in UP. It's okay. So across the country there are no common things and all. So to bring uniformity, GST has to be introduced. So 5 points are here. First one is what? CST. Central sales tax is not given as credit. Second one, excise duty is not given as credit to whom? Wholesalers and retailers. Third one, non-integration of VAT and service tax. On a single contract, if it involves both good and service, since good is involved, VAT also levied, service involved, service tax also levied. Third one. Fourth one, sir, non-inclusion of several state levies into VAT. Okay, several state levies are there, but they were not included into VAT. Okay, like luxury tax, advertisement tax, all these has been levied separately. And the last one, to bring uniformity among tax procedures and collections. So this is the need for GST. Then India. What is India? India is a country. Huh? Yes, it is a country. Everybody agree? India has how many states? And it's still debatable. Huh? How many states? 29. 28. 9 pakka. But Jammu and Kashmir has been removed as a state. Then how many? 28. Pakka? How many union territories are there? 6, 7, how many? 8, 6, 7, 7.5. Okay, there are 8 union territories. Okay. States names anyhow, I am not going to tell you all the 28 states names, but there are only 28 states only. Okay. 29, when AP was divided into or partitioned and the Telangana state is declared, then it became 29. But thereafter, Jammu and Kashmir is removed from states. It's not a state. It was divided into 2 union territories. Originally, there used to be 7 union territories. 7 plus these 2, it should be how many? 9. But then what happened means, see, first, what are the union territories? Sir, south side first. South side, sir, in the Bay of Bengal, south side, we have Andaman Nicobar Islands. Then near Tamil Nadu, we have Puducherry. It's okay. Then this side, Arabian Sea, we have Lakshadweep Islands. So 3 union territories are on the south side. Okay. Andaman Nicobar Islands, Puducherry, Lakshadweep Islands, 3. Then we go to the top, Jammu and Kashmir, Ladakh, 2 union territories, 5. Then Delhi, the capital, 6. Then little bit, okay, turn if you take now, you'll get Chandigarh. Chandigarh is the 7th union territory. Then in Gujarat, near Gujarat, okay, there by the sea, we'll have Daman and Diu, Dadra and Nagar Haveli Islands. Daman and Diu, Dadra and Nagar Haveli. See here, sir. At this place, there is Daman and Diu, Dadra and Nagar Haveli, Arabian Sea only. This side Pakistan will be there. Okay. So these 2 used to be 2 separate union territories. But these 2 now called as a single union territory only. Daman and Diu, Dadra and Nagar Haveli merged as 1 union territory. Okay. That's why instead of 9, there are only 8. Okay. Look at the location, sir. Jammu and Kashmir here and here Ladakh. These are the 2. Then we have New Delhi here and we have Chandigarh here. Okay, 1, 2, 3, 4. Daman and Diu, Dadra and Nagar Haveli, 5. And south side 3. What are those? Here, Andaman Nicobar Islands, Puducherry, Lakshadweep. Total, how many union territories? 8 union territories. Out of this, much more important thing is, even though these are 8 union territories, there are 8 union territories. Puducherry, Delhi, Jammu and Kashmir. Puducherry, Delhi, Jammu and Kashmir. These three union territories has state legislature also. I mean, technically these are union territories, but they function like states only. They will also have a chief minister. For Puducherry there is a chief minister, Delhi there is a chief minister, Jammu and Kashmir there is a chief minister. But Andaman there is no chief minister, Lakshadweep there is no chief minister. So these three are like what? Union territories only, central ruling only, but still they still has state kind of powers also. So what the important thing we need to remember is, for the purpose of GST, these three, which three? Jammu and Kashmir, Delhi, Puducherry, has to be counted as states only. General knowledge wise, these three are also union territories only. But since they work like states, their activities, everything go like states, for the sake of GST, those three are also what? States only. Okay? 8 union territories what? Andaman Nicobar, Lakshadweep, Puducherry, Delhi, Jammu and Kashmir, Ladakh, Chandigarh, Daman and Diu, Dadra and Nagar Haveli. But these three are having state legislature. So these three are technically union territories, but for the sake of GST, we'll count them as what? States. India means 28 states and includes territorial waters which extends up to 12 nautical miles, exclusive economic zones which extends up to 200 nautical miles, seabed and subsoil underlying the water. Even the sea, beneath the sea, the soil will be there. That is also India only, up to 200 nautical miles. And even airspace above Indian land and Indian territorial waters is also called as what? India. Now constitutional provisions. So first, who given the right to levy taxes to the government? Why they only can levy taxes? Why can't we? Okay, I also watched Businessman movie. Okay, in that movie, Mahesh Babu will be there, Surya Bhai. Like what he'll do na, on every transaction he'll collect 2% as tax and he'll be doing mafia. Okay, so same way, why can't we also do? We will also like Surya Bhai, Manideep Bhai. So something, it's okay. So like that, why can't we? Bhavya Bhai. It's okay, Bhavya Behan. So like that, why can't? We also can't levy taxes like that, collect taxes like that. Okay, na? The problem is, sir, to do that, first the constitution should have given the power. A constitution, Article 265. Article 265 says like what? Except authority of law. Authority of law, nothing but government. Nobody else can levy taxes. Okay, sir, government only will levy tax. But which tax has to be levied by which government? Because here we have central government, state government, local government. So which government has to levy which tax? Those are given under Article 246. To avoid conflict between governments, they have given Article 246. Article 246 will consist of list, union list. Union list, na, there a list of entry or list of items or situations will be there on which central can frame law. State list will consist of the items or transactions on which state can frame law. Concurrent list, na, on them both central can frame law, state also can frame law, no problem. Okay, but union list, if anything is mentioned, on them only central can frame law. If something is mentioned in state list, then state only can frame law. So now understand, sir, simple story kind of. There's a big problem with introduction of GST. Sir, central gathered all the states and and organized a meeting and said like, see, we are having this many problems in the GST, just like as we discussed, right? Need for GST, and this many taxes are there. It's being so much of trouble to the business people. We need to ease our tax structure. So we'll introduce GST. Like that, central has organized a meeting and explained to all the states. Now states asked only one question. Okay, we have independence, right? Independence is not countrywide. Even states are also independent. But if you introduce GST, who will collect tax, they asked. And central said like, it is one tax only, na, one nation, one tax. So we will collect tax. Then immediately states started walking away. Why? The point is, why we have to give our right of collecting our taxes to you? So, okay, that's the first point of conflict, because states are losing their independence when GST is introduced. Because one nation, one tax, now who will collect? Central government will collect. So, all the states should be in the control of central government only. So, states are not ready for it. They walked out of the meeting. Now, central government has formed a committee. This committee went on world tour. Okay, not with their families. Okay, only with this. Okay, committee members alone went to world tour. They went to every country and studied their GST model. Okay, they took long, 7-8 years they took also to do all this. Okay, they went to every country and looked after each and every GST model. Okay, then they realized like France is the first country introduced GST. France is the first country to introduce GST in 1800s itself. Not even in 1900s. We are in 2000s. They introduced in 1800s only. Oh, they realized so much, so quick. And again, they continued their journey. But France model not suitable for us. So they went on, and they reached Canada. So they thought like, Canada GST model is something suitable to us. What Canada GST model says like, don't levy one tax. Levy two GSTs. Okay, central GST, state GST. Central GST will go to central, state GST will go to state. Okay, this is somewhat better only. Now, this committee got a conclusion. Okay, this model will work. So they came back and again organized a meeting and explained this. You guys don't worry. We'll not take your money. We'll levy two taxes. Central tax, state tax. Central tax we will take, state tax you guys take. Okay, so no problem. Okay, ek mera, do tera. So such kind of thing. So they don't have any problem. Central share will go to central, state share will go to state. Now, there's a problem came again. The problem is what? Sir, in intrastate transaction, no problem. Why? In intrastate means the seller, buyer both in the same state. In Andhra Pradesh only, let's say. CGST element will go to central, SGST element will go to state. But the problem comes with interstate. Interstate. What is interstate? Seller is in one state, buyer is in a different state. Now, central share, no problem. Central will take their half revenue. For the state share, two states are fighting. Again, selling state says like, let's say Andhra Pradesh sold. Andhra Pradesh is saying like what? No, revenue has to come to us. Whereas sold to Karnataka. Now Karnataka is saying like what? No, the revenue has to come to us. Central happily took their share and went because there is only one central now. That's why there is a problem here. Okay, for this again they took time and again analyzed and came to conclusion and said to the states like, on interstate transactions we levy integrated tax. Again same question, one tax only. Yeah? Okay, one tax. Who will levy? Central. Oh, first place itself states will not trust central government. Why? Because central always cheat them. That's why the states are not ready to trust central. But now central came with what option? We'll divide transactions into two types. Intra, inter. On intrastate, CGST, SGST. I'll get my revenue, you'll get your revenue, no problem. But on interstate, again who will levy tax? Central government only will levy tax. But states, openly they said, on face itself. Okay, no feelings and all. Okay, they directly said, we don't even trust you. Okay, you'll say today one word, tomorrow another word. We are not going to trust you and we cannot keep our revenues at stake trusting you. Okay, then central government said like, no, mother promise, pinky promise, everything she said. Okay, everything central government said, but still they are not trusting. Then finally they said like what? There is something called constitution. Okay, so central government asked one question. You believe in constitution? Yes, obviously state said like we believe in constitution. So we keep a provision in constitution itself that for the sake of flexibility only IGST will be collected by central government, but that revenue has to be distributed between center and states. Central alone cannot take the revenue, it has to be distributed between center and states. Then states cooled off. Okay, constitution it can't be changed easily, so fine, if you keep in constitution we will be agreeing. So understand sir. So what model? Instead of single GST we have three GSTs now. CGST, SGST, IGST. Intrastate transaction will have CGST and SGST. Interstate will have IGST. But IGST for the sake of flexibility collected by central government but distributed between center and state. To which state it is given? Destination state. Sir, if you remember morning class, central sales tax is levied on interstate. But central sales tax is collected by central government, but given to origin state. But in GST, the tax will go to destination state. Understanding, sir? The state element will go to destination state. Okay, sir. So now revenue wise, no problem. Okay, central getting central share, states getting state share. In between, sir, states came and said like what? Sir, our one request is there. What is the request? On alcohol, till date, the total revenue is to go to states only. So states clearly said like, no, alcohol, our right only. We only have to get tax. Even after introduction of GST also, on alcohol, the tax revenue has to go to whom? Only to state. Since it has to go to only to states, alcohol is kept aside of GST. So GST is not applicable to alcohol. Okay, so look at these points. We have Article 246. Article 246 has 7th schedule. It gives power to frame laws. 7th schedule has how many lists? 3 lists. Union list, state list, concurrent list. Union list consists of what? Example, there are so many entries, income tax. State list, example is like VAT sales. Nothing but union list consists of items on which central government can frame law. State list consists of the events or situations on which state can frame laws. The last concurrent list on both central and state can frame laws. Then, sir, this Article 246 does not fit for GST. Why? GST, what they are doing, on a single transaction, both central also levy, state also will levy. So that's why they cannot disturb this existing structure. So he introduced one more article called Article 246A, which gives power to both central and state to frame laws with respect to GST. Empowers central and state government to frame laws with respect to GST. Sir, with introduction of GST, previously, center cannot levy tax on goods. But now central also getting share in goods related tax. Previously on service, states doesn't have any share of revenue. But now with GST, states also will get what? Share of revenue in states. Okay, services also share of revenue will come to state. Okay, so that mutual agreement happened. So they are okay. Then Article 269A introduced. Why? Because of that IGST promise. IGST has to be distributed to whom? Central and states. Okay, if there is no mention in constitution, central may change words afterwards. That's why it is mentioned in constitution. What? It empowers central government to levy tax on interstate supplies, which will be distributed between central and states. Then taxation model. Intrastate. On intrastate, which taxes will be there, sir? Dual GST, 2 taxes. CGST, SGST. Central tax, state tax. If it is union territory, you do GST. Interstate, integrated tax. Then IGST, 50% will go to central government, 50% will go to state government. Then Article 366, they defined GST. What is called GST? It's a tax. GST is a tax levied on supply of goods, services or both, except alcoholic liquor for human consumption. Why except alcohol? State said like the tax revenue has to be there only with the states. They are not ready to share their revenue on alcohol with the central. That's why it is excluded from the coverage of GST. GST is a tax levied on supply of goods, services or both, except alcoholic liquor for human consumption. Okay. Sir, if you remember the initial part of the class, to be independent, only revenue if you have enough. What else should be there? Decision making power also should be there. Here, a single tax has been brought. One GST. Instead of removing all those multiple taxes, GST has been introduced. Okay, states getting their share of revenue. SGST they are getting, in IGST share they are getting. But who will take decisions? Again, central said like, I will take decisions. I am like your big brother. I will consider all your points and all. So I will take a decision. Okay, na? It's something like Bharadwaj joined a job. Okay, is joined in a job. Okay, then Manjunathan is his friend. Okay, then Manjunathan said like what? Bharadwaj, don't worry. Whatever the salary you got, give it to me. I'll keep safe with me. Whenever you want, you take from me. It's like your money when it is with me now. It's like almost your money only. Not even like bank. Bank also at least night times closed. For me, you can take Any time like that he said, it's okay, Bharadwaj. So innocent, na, he trusted. Okay, he listened to Manjunathan, everything. Later, salary, like let's say 6 months salary got credited. Okay, now Bharadwaj want to buy a bike. Okay, it's okay. Why Manjunathan asked like, why you need bike and all. So Bharadwaj saying like, I have a girlfriend. We need to go across and all. So I need bike. But Manjunath is saying like what? No, you should not have all these things and all. Love is something bad. Okay, you should not. Afterwards again, breakups will happen. You cannot take care. All these preachings he is giving. Okay, so first time he listened. Then again he came. After some 6 months he came like, no, Bharadwaj came like, no, I'll buy car now. Okay, my parents and all will be there. So for us family, we need car. Again, Manjunathan saying like what? Why car? Car na, so much of price and all, it depreciates so quickly. Okay and all. Sir, first it's whose money? Bharadwaj money. Who has to take a call? He has to take a call. But now who is saying, okay, Manjunath is saying like all these reasons and all. The same thing. When state's money is with central control, decision making is central, na, then they'll say like, no, this is not required, that is not required and all. So state said like, we are not only interested in money, we should be even involved in decision making also. Okay, then again, central saying like, how can we all take decisions and all? Okay, I'll take, as a big brother, I'll take decisions, you just obey to my rules and all. States not accepting. We should be, each and every one of us should be involved in the decision making. Then only we'll accept GST. Otherwise, no problem. We are okay with old taxes also. We'll go back to old taxes. Then again, central thought of it and formed something called GST Council. So council is a collective form of central and state representatives. Okay, it will have central representatives, state representatives. All together, they decide and take a decision with respect to GST. Okay, but here there is a practical hurdle, sir. As per constitution, any tax decisions has to be made through law. But law cannot be made by council. Law has to be made only in the parliament or in the assembly. Okay, not by this council or this group of persons. That's why they are actually decisions only. But they are council, whatever it decides, that is decision only. But instead of decisions, they are called as recommendations. Okay, those recommendations will be taken by parliament and they'll make it as a law. And even the state governments also, they'll make it as a law. Okay, through their state government assemblies and all. Okay, so now who will be there in this council? Sir, what is the point here? There will be representatives of both central and state. So who will be there in this council? And who will? Sir, this council is empowered. Okay, this council is created or empowered by whom? President empowers to constitute GST. So he constitutes what? GST Council. It consists of Union Finance Minister. Union Finance Minister. Okay, he or she will be acting as what? Chairperson. Then Minister of State Finance, Union Minister only, sir. Again, second one also Central Minister only. Deputy Finance kind of. Within the Finance Ministry, sir, there are one Union Finance Minister will be there, another deputy kind of 3-4 ministers will be there. One among them also will be acting as what? Member of Council. So one Union Finance Minister and Minister of State. Sir, state na, sir, understand, state doesn't mean here the normal states kind of. Central also can be represented as state sometimes. In Telugu, state means Rajyam. Okay, state means Rajyam. So like kingdom kind of. Okay, it can be referred as what? One particular small state, or the whole nation also can be referred as sometimes what? State. That's why Minister of State. Minister of State, na, it doesn't mean he is a state minister. He is also what? Union Minister only. Under the Finance Ministry only. He is a Deputy Finance Minister kind of. These two people will be there under the council representing whom? Central government. Now from every state, their state finance minister will be the member of council. But if sometimes he is a finance minister but he don't know finance, then they can send some other person from the state government to the council. Okay, simple thing, sir. From every state, their finance minister can be the member of council. Or instead of finance minister, they can send any minister also as member of council. Okay, from every state, one person. From central, 2 people will be there. These are the total people who are there in the council. See, How many states are there, sir? 28. But what we said, 3 union territories which are having state legislature also has to be counted as states. So total 31 people are there. So these 31 from states and 2 people from union, central. So total 33 members will be there in the council. So these people will take decisions collectively. So now decisions are not taken alone by the state government or central government. Collectively they are taking a decision. That's why council has been formed. Okay. So to take a decision in the council, how much should be in favor, sir? 3/4. Sir, 3/4 not head count. Head count, if you do not, always states only will win, because they have 31 members, central together have only 2 members. So it's not their head count. Okay, you watched the Salar movie. Okay, there every person will not have equal voting rights. Some people will have voting rights, sir, it depends on their person. So the same way here also, council will not have equal voting rights. What? Central, even though there are only 2 members representing central, their 2 members alone will have 1/3 of the voting power, 33.33%. Their votes are equivalent of 33.33%. States all together 66.67. 66.67 voting power. Central has 1/3, states all together 2/3. To take a decision, how much should be in favor? 3/4. I mean 75%. Only central cannot take a decision. All the states also cannot take a decision. So central and majority states accept, then they can take a decision. Then quorum. What is called quorum, sir? Minimum number of members to be present to call it as a valid meeting. So here council meeting also there is a something called quorum. For council meeting the quorum is 50% of members should be present. So how many are there total? 33. Out of 33, at least 50%, 17 people. 16 and a half will not be there, right? So 17 people has to be present to call it as a valid meeting. Okay. What council will do? They'll keep a meeting. Okay. They'll eat sweet, mixture, samosa, and then they'll come back. Maybe they do all that, but still there are certain functions of GST council to give recommendations on tax rates. What tax rates has to be given? So recently they wanted to remove 12%. Sir, actually the problem in GST model is, even though it is a single GST, not single rate, we have 3% tax rate, gold, 5% tax rate, 12% tax rate, 18% tax rate, 28% tax rate, and there is even 40% also. So total 6 rates are there. We are saying one tax, but not one rate. There are 6 rates. Okay. Now, what, I mean, the next reform, what the council is thinking of means, these 6 we need to merge and bring them to 3, 2, 1 like that, gradually over a period of time. But to do that, they have to start one initiative, right? So they have targeted 12%. So first we'll remove this 12. At least 6 will become what? 5. So 40% only on tobacco items, sir. So that is not even counted by them. 40 they left. So 3% is there. 5, 12, 18, 28 is there. So now this 5 they want to first bring it to 4. So what they thought, this 12% category is there, na? They want to bring those 12% category, few into 5%, few into 18. So that 12 can be removed overall. Okay. That's why council has taken a decision like 6 months back. Last September, if you see, many electronics goods price has been reduced because majority were brought down from 12% to 5%. There are certain became costlier also because they pushed from 12% to 18%. For bikes and all, if you see, 350 bikes used to be under 12%. What they did, below 350cc or equal to 350cc, they brought down to 5%. Above 350cc, na, they pushed them to 18%. Okay, who will take those decisions? Council. Okay, first the council will decide and give it as a recommendation to the parliament and assemblies, so they will make it as a law. So recommendations on tax rates, recommendations on exemption. If any good and service has to be exempted from GST, who will decide again? Council. Threshold limits. What are threshold limits? To register under GST, if your turnover exceeds 20 lakhs, you have to register. Exceeds 40 lakhs, you have to register. Those are only called as threshold limits. Those limits also will be decided by whom? Council. the taxes to be subsumed into GST. What are the taxes subsumed into GST? Central sales tax, advertisement tax, luxury tax, lottery tax, octroi tax, entry tax, entertainment tax, service tax. Who said only these taxes has to be subsumed? Council. Principles of levy. Principles of levy, na, sir, in general, who will pay tax to the government? Supplier or recipient? Supplier. But there are exceptions also. RCM. Who will pay tax in that? Recipient. So, in which cases default? In which cases RCM? Who will decide? Again, council only. And then the last one, date from which petroleum products can be brought into GST. From when all these petroleum products can be taxed under GST. That also will be decided by whom, sir? Council. So the functions of councils are like to make recommendations on tax rates, to make recommendations on tax rates, exemptions, thresholds, taxes to be subsumed, principles of levy, date on which petroleum products can be taxed or brought into GST. Then goods which are out of the ambit of GST, we already know. These are currently not under GST. Alcohol. Why? By definition itself, alcohol has been removed because GST is a tax levied on supply of goods, services or both except alcoholic liquor for human consumption. Reason also I said, because states are not ready to share their revenue from alcohol with the central government. That's why it was not brought into GST. It won't be brought also in the future also. Whereas petroleum products are not excluded from GST. But currently on petroleum products, governments almost getting 80 to 85% of the petrol price currently is because of taxes only. Either central may take in or states may take. Now if they bring them into GST, in GST the maximum rate is 40. But they are getting some 70-80% of tax revenue from petrol now. Okay. Now when they bring it to GST, their revenues will fall down. Okay. That fall, central and states are not ready currently. So they are taking time. Slowly we'll introduce petroleum products into GST. That's why for the time being they are outside the scope of GST. Whenever council recommends, from that day again they will be brought into GST. They will not recommend all these products at once. First they will take gas, then they will take aviation turbine fuel, then again motor spirit. Slowly in a phased way they will take one item into GST. So what are those petroleum products means? High speed diesel oil, petroleum crude, motor spirit, aviation turbine fuel, natural gas. This is called what? HP, man. High speed diesel, petroleum crude, motor spirit, aviation turbine fuel, natural gas and alcoholic liquor for human consumption. All these within GST or outside GST? For them there is another word also called as a name called non-taxable supplies. These are called as non-taxable supplies. Then certain key points are, we already discussed this only. GST is introduced by making 101st amendment to the Constitution. Sir, why Constitution is amended? Article 246A has to be introduced. 269A to distribute IGST revenue between central and states. Then Article 279A because it empowers the President to form GST Council. Then Article 366 which defines GST. All these has to be kept in the Constitution. To keep them in the Constitution, Constitution has to be amended. So 101st time Constitution has been amended to introduce GST. It is applicable from 1st July 2017, whereas in Jammu and Kashmir it applies from 8th July 2017. India adopted which GST model, sir? India adopted Canadian GST model, but France is the first country to introduce GST. GST is a destination based tax. Why? IGST revenue, half will be taken by whom? Central. The other half will be given to state. Which state? Sir, in interstate, two states will be involved now. That share of IGST will be given to buying state as selling state. Buying state. Buying state is the destination. Since the revenue are going to destination state, GST is called as what? Destination based tax. The tax revenue accrues to the buying state. That's why it is called as, sir, when Tamil Nadu sold goods to Karnataka, IGST will be there. In this IGST, share will be given to Tamil Nadu or Karnataka na? Karnataka. So the destination is in Karnataka. Revenue also will go to destination state. That's why it is called as what? Destination based tax. And then GST is a value added tax also. Why value added? In GST also there is ITC. Because of ITC, at every stage, instead of taxing the whole value, the value addition at each stage is only being taxed. By allowing set off of tax paid in prior stages, at every stage only the value added gets taxed. That's why it is called as what? Value added tax. GST is a value added tax due to set off of tax paid at each stage. Only value added at each stage is taxable. Then compensation cess. What is compensation cess? Understand, sir? This destination based tax principle is not favorable to certain states. Let me show you the example. Tamil Nadu is one state where lot of manufacturing will happen. So they produce more and sell more rather than they consume. See, Tamil Nadu, pre-GST regime, origin based tax. They produce 100 units. Assume on each unit they used to get 5 rupees revenue. Out of these 100 units, they sold 80 units only within Tamil Nadu. Other 20 units they sold to other states. 100 units produced. How many sold within Tamil Nadu? 80. Other states? Pre-GST, origin based tax or destination based tax? For all these 100 goods, they may be sold only in 80 in Tamil Nadu, other 20 other states, but origin for all the 100 goods is what? Tamil Nadu only, na? So Tamil Nadu used to get 100 goods into 5 rupees, total 500 rupees revenue they used to get. Now what happened? Post GST, destination based tax. They produced 100, but for the 100, destination is not Tamil Nadu for all the 100. For how many goods destination is Tamil Nadu? 80 only. Okay, now they will get revenue only equivalent to how many goods? 80. So 80 into 5 na? 400 only. Previously they used to get 500. Just because change in tax model, they are losing how much? 100 rupees revenue loss. For this, Tamil Nadu not accepting. Not only Tamil Nadu, West Bengal, Maharashtra, Gujarat, all these are certain states where there will be more manufacturing rather than they consume. Okay, but by that time, Maharashtra is also in BJP rule because GST is passed in 2017. By that time, Maharashtra is in BJP, Gujarat BJP, West Bengal, Tamil Nadu are not under the BJP rule. So these are strongly opposing the GST law. That's why to cool them, what central came, don't worry, you are losing revenue na, that revenue I will compensate. Till here it's good only. But to compensate that, what central is saying na, I also don't have money to compensate. So I will take from public only. By levying an extra tax called compensation cess. Through compensation cess, whatever the revenue comes, I will give it to you. Don't worry, don't try. I will compensate your revenue loss. So compensation cess is levied by whom? Central government. To compensate revenue loss to state governments due to introduction of GST. Because of introducing GST, whatever is the revenue loss, such revenue loss will be compensated by whom? Central government. Okay, it is levied on both intra as well as interstate supplies. Leviable on supply of luxury goods and even demerit goods. Compensation cess is in addition to CGST, SGST and IGST. Cess will be in force up to 31st March 2026 only, because they don't want to continue it so long. So they said initially 5 years, later it was extended till 31st March 2026. Okay, compensation cess is levied by whom? Central government. Why it is being levied? To compensate the revenue loss to state government. It is levied on intra na interstate? Both intra and interstate. Is it levied on each and every good? No. Only on certain luxury goods, demerit goods. Demerit na, like tobacco, pan masala, not of much necessary to the public. On them they will be levying. It is in addition to CGST, SGST, IGST. That will be there, and even cess also will be there. Okay, will be in force up to when? 31st March 2026. Goods value of supply is 10 lakhs. On this IGST at a rate of 18%, which is how much? 1 lakh 80. On this cess 10%, 1 lakh. See, sir, it's not like income tax cess. Income tax cess, now what we'll do? On tax we levy cess. Here the compensation cess is not levied on tax. See, value of supply 10 lakhs. On this only 18%, 1 lakh 80. This cess also leviable on what? Value of supply only 1 lakh. So total price is 12 lakh 80,000. Then sir, the basic questions are difference between direct and indirect taxes. Indirect taxes, incidence on taxpayer. You only pay tax, you cannot pass it on to someone else. You earned income, you only have to pay the tax. Incidence also on you, payment also has to be made by you. But in indirect taxes, even though it is paid by supplier, shifted to buyer. Okay, ultimately the incidence or the whole tax burden has to be bared by whom? End consumer. Whereas in direct taxes, there is no such possibility. Direct taxes are progressive. What does it mean by progressive? When your income increases, tax rates will also increase. How? 4 lakhs. Your income is up to 4 lakhs, 0%. 4 to 8 lakhs, 5%. 8 to 12, 10%. 12 to 16, 15. So income increasing, tax rate also increasing. That's why it is what? Progressive in nature. Whereas indirect taxes are regressive in nature. What does it mean by regressive? Irrespective of your income capacity, whether you are rich, whether you are poor, you will be taxed at the same rate. Understand, sir? Shifting of tax burden. Sir, under direct taxes, that possibility is not there. My income, I only have to pay the tax. But whereas in indirect taxes, supply made by supplier, but collected from recipient. So that shifting of tax burden is possible. Basis, why direct tax will be levied? Income generation. If there is income, then only direct tax. Whereas indirect taxes, consumption. You are buying something, they are selling something, so consumption happening. So it is based on consumption. Direct taxes, what is the administrative body? CBDT, Central Board of Direct Taxes. In indirect taxes, what is the administrative body? CBIC, Central Board of Indirect Taxes and Customs. Direct taxes, sir, we have income tax here. For indirect taxes, we are having GST and customs, like examples. Then, features of indirect taxes. Features, the qualities, characteristics of indirect taxes. First one, revenue source to the government. Because of indirect taxes, there is more revenue coming to the government. Now, out of total tax revenue, indirect taxes is only contributing almost 50%. So previously, income tax only is the major source of revenue to the government. But slowly, service sector has been there, our economy has been shifted to consumption-based economy. So when a country is growing, it consumes a lot. Okay, when the per capita income of individuals increasing, then also will spend a lot. Okay, you already know. So okay, when you asked your father or grandfather, they used to say like, we used to have only 2 shirts, 2 pants. Okay, with them only we have survived a whole year, they used to say. But are we surviving the same way? Okay, so what increased? Consumption increased. Okay, they used to biryani once in a year. But we, okay, so all this consumption has been increased. The gadgets, electronic gadgets, or think of anything, the consumption has been increased. When consumption increases, automatically indirect taxes will increase. So now, considering the economy trend also, more than now almost 50% of revenue is from indirect taxes, but sooner it will be more than 50% also. Regressive in nature. What does it mean by regressive? There is no difference between rich and poor. Every has to pay the same tax rate. Okay? Mukesh Ambani purchased the dairy milk chocolate. Same tax rate. You purchase the chocolate, same tax rate. No difference. He is having so much money, but still same tax rate. We also having the same tax rate. So regressive in nature. But regressive in nature is not good, sir. Being regressive is not good. But there is no possibility. That's why they kept it as regressive. What the problem with regressive is what? Sir, Ambani paying 20 rupees as tax, we paying 20 rupees as tax, different, same only, yeah. Our 20 rupees, his 20 is not same. You may say like value wise same only, na. But you having 20 rupees is some, okay, leave about 20. Let's say you having 20,000 is big thing to you, but he 20,000, na, not even considerable also. That's why when it is regressive, na, then the difference between rich and poor will increase much more wider. It makes much more gap, okay, which is not good actually. But still, the revenue, that indirect taxes are what? Regressive in nature. Then inflationary. Indirect taxes will lead to inflation. Sir, how indirect taxation leads to inflation? See, normally the good price is 100. Now we found this GST 18% is levied. How much added? 18. What is the selling price? 118. If there is no GST, na? 100. Because of GST, prices increased or not? When prices are increasing, that is nothing but inflation. So GST leads to what? Inflationary situations. And these are levied on both commodities and services. Commodities means what? Goods. So indirect taxes are levied on both goods and services. Shifting of tax burden. Okay, what is shifting of tax burden? Supplier will pay tax, but will recover from buyer, so, or recipient. That's called as what? Shifting of tax burden. Higher tax base. Higher tax base, na sir, or wider tax base means under indirect taxes there are lot many ways to tax. So many goods, so many services to levy tax. Sir, in our classroom only, sir, none of you are paying income tax, but each one of you are paying indirect taxes. Why? Because you are consuming. So there is so many, there is wide scope. And again in indirect taxes, there is something called basic exemption limit. If your income didn't exceed this limit, you need not to pay income tax. But in indirect taxes, there is no such thing. Everybody has to pay tax only. So what is happening? There is wider scope, wider range of goods, services available here to tax. The next one, welfare. What is welfare, sir? Under indirect taxes, the government is taxing under indirect taxes sin goods. Sin goods means what? Tobacco, alcohol. Sorry, remove about alcohol because alcohol is not. Alcohol is also under indirect tax only. Tobacco, alcohol, these are sin goods. Why sin goods? Na, like the society thinks like consuming them is like a sin. So that's why these sin goods are taxed at higher rate. When they are taxed at higher rate, their price will increase. Once their price increases, their demand will reduce. So they are contributing to the welfare of the society. That's why, what are the features of indirect taxes, sir? Revenue source to the government, regressive in nature, inflationary, they are levied on both goods and services, shifting of tax burden, higher tax base, welfare. Okay, these are the features of indirect taxes, which is nothing but what? Rickshaw. Revenue source to the government. Why? Because of indirect taxes, more revenue is coming to government. Regressive in nature. No difference between rich and poor. Everyone taxed at a same rate. Inflationary. Under indirect taxes, by levying indirect taxes, the prices of commodities, goods, services will increase, which leads to inflationary conditions. See, commodities and services. Indirect taxes are not only levied on goods, they are levied on both commodities, goods and services. Yes, shifting of tax burden. Supplier will pay tax, but he will collect from recipient. That's called shifting of tax burden. Last one, welfare. How? Sin goods are taxed at higher rates. When they are taxed at higher rates, their consumption will come down, which will lead to welfare. So these are the features of indirect taxes. Then, sir, benefits of GST. benefits of GST. GST is a win-win situation for entire nation. What is win-win situation? Win-lose, you know. So if it's an IPL match or a cricket match, if one team wins, the other team loses. But here they are saying like what? Win-win. So for everybody, it is like a win only. So that's called, they are saying like what? I mean, everybody will get benefited because of GST only. That's why, because of GST, that's why they are calling it as what? Win-win situation. Okay, what are those benefits? Major benefits we are discussing. Boost to Make in India initiative. A central government is with a initiative, what? Make in India initiative. What is meant by Make in India initiative, sir? To encourage manufacturers here, to encourage manufacturing goods within India. Nothing but by encouraging manufacturers here, we wanted to do exports and all also. How GST gives boost to do it? Sir, what comes if you drink boost? Energy, strength, stamina will come when you drink boost. Same way, with the GST, Make in India initiative is getting energy, strength, stamina, this is coming to Make in India initiative. How? Due to GST, or due to introduction of GST, double taxation eliminated, cascading eliminated. Because of elimination of these two, hidden costs were removed to the businesses. When those hidden costs were gone, their costs will come down. When their costs came down, they can produce goods at much more competitive prices, cheaper prices. Okay, so when they can produce goods at more competitive prices, they can create demand outside India and even within India. So they can supply more, they can sell more. When they are selling more, obviously the manufacturing will be better and will get increased also. So that way it is contributing to the Make in India initiative. Simple point, sir. Because of GST, their costs are coming down. Why? At every stage, credits are given now. Double taxation cascading is eliminated. So because of this, their costs come down. Once their costs come down, okay, they can produce at a more competitive, cheaper prices. So they can create more demand. Their Make in India initiative can be boosted. Second one, increase in government revenue. Sir, how government revenue increases? Sir, in indirect taxes, especially in GST, it's highly integrated with the technology. Since it is integrated with the technology, the chances of doing tax evasion are completely or almost nullified for elimination of, the revenue leakages has been controlled. There is no chance of revenue leakages. So the government is getting the revenues efficiently. Okay, so that there is increase in government revenue. Sir, what happens? Every supplier has to report his sales to GSTN. How will report his sales to GSTN? Through GSTR 1. Now, to recipient, where they will reflect? GSTR 2A, 2B. Now, based on this, these are outwards reported by supplier to GSTN. Then GSTN, from this GSTR1 data, it will automatically reflect in what? GSTR2B of recipient. Now based on this only, recipient can avail ITC. Sir, this particular system, okay, has reducing the scope for tax evasion. Why? You being a recipient, now you don't have a choice to tell what is your purchase. Whatever is reflected in 2A, 2B, that is only eligible for you to claim ITC. But pre-GST, there is no this matching concept. You being a recipient, you will tell how much are your purchases. On them you can avail ITC. There is no default cross verification. Here by default, how much a seller reports, that only will be given to buyer. So because of this kind of defaultly cross-check mechanism is there across the GST system. So the tax evasions, revenue leakages has been controlled. There is increased revenue to the government. And even the coverage also has been increased. Then third, elimination of double taxation. We already know. Why? At every stage credit is given. At every stage. Interstate, intrastate, no restrictions. Manufacturer, wholesaler, no restriction. Everybody will get ITC. Okay, at every stage, the tax paid in prior stage is given as ITC. So because of this, what? double taxation eliminated, cascading effect also has been mitigated. Then fourth one, sir, creation of unified national market. Previously, before GST, in Andhra Pradesh one VAT model, Karnataka another VAT model, Maharashtra another VAT model. Now across the country, the same GST model, same due dates, same forms, same structure. So this has created across the nation uniformity, and every state, from wherever you buy, you will get ITC. Previously what, if you buy from interstate, from Tamil Nadu, if you buy, you will not get ITC. But now you buy from Tamil Nadu, you sell to Karnataka, no problem. No barriers, no borders, state borders and all. You buy from anywhere, you sell to anywhere, you will get ITC, he will also get ITC. Same rules, same formats, same procedures. This has unified the whole country as one market. Instead of dividing and looking after each state as a separate market, now the whole country is taken as a one single market. So creation of unified national market is another benefit. So what are the benefits of GST, sir? Boost to Make in India initiative, increase in government revenue, elimination of double taxation, creation of unified national market, and mitigating the ill effects of cascading. Mitigating the ill effects of cascading. These are what? These are the benefits of GST. Okay. And throughout the syllabus, sir, we will be mainly discussing what? CGST only. IGST we have a limited extent, like place of supply, and at places only the place of supply provisions will come. So the only one concept pending, sir, here for us, GSTN, Goods and Service Tax Network. Goods and Service Tax Network. Sir, why GSTN? Sir, GST is the most recent tax law. By that time only IT revolution has been started. Okay, by 2017 only many technology companies are there, softwares are there. So what they thought means, GST, they want to design it in such a way which is completely integrated with the tech. Okay, so technology was interlinked at everywhere in the GST. So to look after all these technology related aspects, and then IGST revenue has to be shared between whom? Central and state. Such settlement has to be done timely. Sir, the revenue between central and states has to be distributed in a timely manner. Yes or no? So to do those settlements also, one person is needed. Sir, what we said, IGST has to be distributed between whom? Central and state. But the distribution has to be done timely. To make those timely settlements only, they need one person. And to look after the technology aspects also, they need one person. For that only, they created another person called whom? GSTN, Goods and Service Tax Network. It's a Section 8 company. What is meant by Section 8 company, sir? Non-profit organization. It's a Section 8 company which is wholly owned by government. It acts as a clearing house. Clearing house means what? It clears the revenue. Between whom? The central and state. So whatever the tax revenue, how much has to go to central, how much has to go to state, that decision, that deciding will be made by whom? GSTN. It acts as a clearing house to settle the revenue between central and states. And GSTN manages a website called www.gst.gov.in, which acts as a linkage to all the stakeholders, not shareholders, stakeholders, whoever are associated with the GST, like the taxpayers, consultants, government, any other people also. For all of them, it is acting as a linkage. Okay, so GSTN is what? It's a Section 8 company wholly owned by government. It acts as a clearing house to settle the revenues between central and states. It manages a website called www.gst.gov.in, which acts like a linkage to all the stakeholders. Functions of GSTN. It facilitates registration. It does not grant registration. It facilitates registration. Sir, registration will be granted by CBIC team. See, Here taxpayer is there. Here CBAC is there. You want to apply for registration. You need not to go to their office. What is there in between? There is a linkage between both of you. What? GSTN. So you will file your application with GSTN and GSTN will give it to CBAC. CBAC verifies, grants registration and mention here you will get your registration. So GSTN is what? Facilitating the registration, not granting the registration. So there is a difference between granting registration and facilitating registration. Sir, who will give you CMA certificate, sir? ICMAI. But who is giving coaching? BCCA. There is a lot difference between BCCA and ICMAI. Same here also, GSTN will facilitate. BCCA also will facilitate you in getting CMA qualification, not directly give you the CMA qualification. But who grants the registration here? CBIC, but GSTN will facilitate same way. Okay. Now, forwards the return. You file a return, then such return will be forwarded by GSTN to whom? Central and state authorities. Then matching tax payment details with bank network. Sir, you wanted to pay tax through online. Okay. In your bank, 5,000 rupees has been deducted. Now in GST portal, how much it shows as tax paid? 5,000 only, right? So this collecting data from bank portals, bank servers and reciprocating it in the GST portal, this thing also will be carried out by whom? GSTN. It's not a big thing. Every website will do. Sir, you ordered food in Zomato, sir. When you are in from your bank account 500 rupees deducted, na, what Zomato has to show? It has to show that money has been received, order has been placed successfully, all that message it will show. Na. So it is not something only there with GST, matching tax payment details with bank network. Any website, any online payment, this thing will happen. Okay. Whatever the amount is deducted from your bank account, that has to be reflected. So matching the tax payment with bank networks. Then settlement on the computation of IGST. How much ever is the IGST revenue is there, that IGST revenue has to be distributed between center and states equally. Fifth one, providing analysis on taxpayers profile. Providing analysis on taxpayers. So first understand what is called MIS report. Management Information System report. Sir, GSTN has a lot of data. Sales data, purchases data, industry wise also. Iron industry, painting industry or construction sector. So if government wants to check any reports, how construction sector is performing, how automobile sector is performing, they can take written reports from whom? GSTN, because GSTN has all the sales data. So GSTN will provide MIS reports. MIS is nothing but those summary reports will be prepared and given to government. Then provide analysis on taxpayers profile. For every taxpayer, a profile is created, which consists of all your records. Last 5 years, what you did, every record will be there. So system only will analyze and observe any deviations are there. When any deviations are there, based on system based only, an assessment can be triggered to you. Okay? And running the matching engine. What is matching engine? Supplier files GSTR1 with the GSTN. Then GSTN has to do what? It will reciprocate all these supplies as inwards to whom? Recipient. So this reflecting corresponding from the outward supplies, reflecting those supplies to the corresponding buyers is only called as matching concept. That also taken care by whom? GSTN. What are the functions of GSTN, sir? Facilitates registration, forwards the returns to central and state government, match tax payment details with bank network, settlement and computation of IGST, providing various MIS reports to government, providing analysis on taxpayers profile and running the matching engine. These are the functions of GSTN. Okay, sir. So I am closing for now. So tomorrow we'll complete vision, mission and advantages of GSTN, and then we'll be going into supply chapter also. Sir, we have another session pending, but in that session we'll be starting with customs. Okay, we'll start it at like 10:05. It's okay, around 10:05 we'll be starting. Sir, who are watching live, the same like this session, another YouTube live will be created for you. you can join from there. It's okay. Thank you.